business news, we're news for business people.
Good morning. You're watching Daybreak on Bloomberg Quint Live, India's first digital live streaming business news service. I am Agam Akil, and here are the headlines. Asian markets look set to open on a muted note. Benchmark indices on Wall Street come off highs. And Walt Disney buys 21st Century's Fox's assets for about $52 billion, and the deal marks the breakup of Rupert Murdoch's media empire. And exit polls predict a sweep for the BJP. The ruling party is set to return in power in Gujarat with around 115 seats and form the government in Himachal Pradesh with 3/4 majority. And the government is expected to table 25 bills in 14 working days during the winter session of Parliament, which begins today. But US stocks closed lower on Thursday as two GOP senators raised some concerns about the tax bill, and the index also snapped a 5-day gaining streak. Bloomberg's Abigail Doolittle wraps up with the US markets with more updates.
Stocks finished lower in Thursday's Wall Street session. The Dow, the S&P 500, and the Nasdaq all finished down by about 0.3% or more. This after being higher earlier in the session. In fact, the Dow put in yet another all-time high. But the source of pain for investors seems to be uncertainty around tax reform, whether or not the Republicans will manage to present a unified bill to President Trump to sign before the holiday break. And the small cap index, the Russell 2000, down more than 1%, sensitive to those swings. And high tax companies, which had been rallying in anticipation of a bill going through or being presented to President Trump, actually now down on the week by about 0.5%. So some interesting swings there. Another big story in the day, net neutrality rolled back. This seemed to affect Facebook trading lower. Charter also traded lower. However, Comcast and Alphabet both finishing higher. And the big stock story on the day, Disney and Fox. Disney is buying some of Fox's assets for $52.4 billion. In particular, they're buying the Sky Satellite network over in London, England, and in Europe. Also, the film studio in the U.S. Those shares, both sides, finishing sharply higher. In fact, Fox higher by more than 6% on the day, up more than 35% from the time when speculation or news reports first emerged that these two companies could strike a deal. Overall, though, on the day, it started off with a modest risk-on tone, but with havens trading higher. At the end of the day, with stocks lower, it ended with a risk-off tone. In New York, Abigail Doolittle, Bloomberg News.
But how are Asian markets panning out? Let's take a look at the Nikkei right now and see what the index is doing out there. Well, in terms of that, they have it, a cut of nearly 1%. This is, of course, after we've had some pressure as far as US markets go. Of course, we will have Bloomberg's Rosalind Chin joining us later on. But moving on to Indian markets then, how was the day yesterday and what can we expect today? Of course, it's going to be all about elections. We have Darshan Mehta joining us to take us through that. Good morning, Darshan.
Good morning, Agam. And if you're looking at it, the SGX Nifty seems to indicate that the verdict that the exit polls did throw up seems to be on the positive side. The SGX Nifty is up almost 60 points, above the 10,350 mark. So that's extremely positive. As far as the ADR is concerned, Vedanta was the only one that ended in the red. So ICICI Bank, HDFC was up almost 1.5%. Dr. Reddy's was up almost 1.3%. So positive cues for most of the ADR. Now, crude has rallied for the second day, ended up almost 0.8% overnight. but still it will end. It's headed for the third weekly loss because at the start of the week there were heavy losses as far as crude was concerned. So that's the view that's coming in. Strong close by the base metals on LME, except for one metal. All of them did well. So aluminium was up 2%, zinc was up 1%, copper was up close to 1%. Tin and nickel were up 0.5%. Lead was the only one which was down 1.5%. Even commodities in China, the opening has been rather strong. Let's take a look at it. Aluminium is up 1%, copper is up 0.5%, and rubber is up almost 0.7%. Steel is the only one which is trading slightly weak. It is down almost 0.8% in opening trade. Gold is trading muted after the flat closing overnight, but gold is headed for the third weekly gain. Is headed for a weekly gain after 3 weeks of losses. As far as flows are concerned, FI has bought in almost 232 crores in the cash market. Let's take a look at what DIS did. DIS sold in almost 347 crores, 374 crores in the cash market. So overall 2300 crores of net buying by FIs this month. The DI number has come down from the earlier 4500 crores to almost 3900 crores in the cash market because they were sellers yesterday. As far as the Nifty was concerned, Nifty was up almost 59 points. Nifty snapped the 2-day fall. What sectors gained? FMCG and energy gained. Media was the only one that actually ended in the negative. As far as how the Nifty ended and what contributed, ITC was the big contributor after news coming in that Godfrey Phillips has raised some of the cigarette prices. So ITC reacted sharply. HDFC Bank again will be in focus because of the QIP. Reliance, Infosys. So the heavyweights managed to contribute significantly. On the losing side, it was very surprising to see TCS. That was the one that actually dragged the index down by 10 points, else the Nifty would have been much higher. So that's the Q Agam we are getting in from the broader markets globally currently.
And what about FNOQs, Darshan?
Yeah, so FNOQs, you're looking at the Nifty managed to rally yesterday. It was a short covering rally. You can see that the open interest was down 2.5%. So fresh buying was there, so short covering was seen. Same was the case with the Bank Nifty. The premium is 45 points. That saw an open interest decline of 10%. So short covering was clearly seen. Wix didn't move up that much. It was up just 3%, given the fact that the rally was not very sharp. But today the Wix will probably come down. What we are seeing as far as the PCR is concerned, from 1.25 to 1.27, given the fact that put writers became much more aggressive in trade. Now, if you're looking at where the open interest distribution is, currently 10,000 continues to be the big support level for the market. Again, at 10,100 and 200, you're seeing that put writers are becoming aggressive. This is the area where it's a gray area between 10,000 and 10,200, and above that there is a lot of support level coming in. So if the Nifty manages to break the 10,300 mark with force today, call writers will have to shed positions in open interest. What happened yesterday? Just take a look at where put writers were active. You wrote in yesterday at 9,900 and 10,000 and 10,400, 500, 600. So what you're seeing is that the exit poll indicated that the move could go either way. So at this level where the market is currently, there were no positions taken. So call writers took positions on the higher side and put writers took position on the lower side. So probably with the rally today, put writers will be much more aggressive. There are some changes as far as the FNO ban is concerned. TV today comes in the FNO ban, so that is one of the counters. There are a couple of counters that go out of the FNO ban. Jet Airways, ever since the result has been in the FNO ban, has gone out, and IRB Infra was the big rally trader, big stock that rallied yesterday. That goes out of the FNO ban. Now, if you're looking stock specific, Berger Paints is the one we are watching out for. Fresh short positions were seen. Open interest build up was close to 27%. So this one will be in focus. So Berger Paints is something that the FNO indicator is showing up again.
Absolutely, Darshan, and I'll also be watching about the Wix
Yes.
because we are looking at expectations on that's the exit polls have thrown up when it comes to Gujarat and Himachal Pradesh elections. But moving on, let's take a check on the rupee and the bond market. We have Saloni Dhanuka joining us on the show. Good morning, Saloni.
Good morning, Agam. So the rupee yesterday snapped its 2-day losing streak and it rebounded by 10 paise to end at 64.34 levels against the dollar on the back of expectations that BJP will emerge victorious in the current Gujarat poll elections. Now, Nomura also believes that exit polls will improve sentiments for the Indian rupee in the near term. However, rising crude oil prices overseas still remains a key risk for the home currency, and it is something that should be closely monitored. Now, on the global front, dollar erased gains of as much as 0.3% yesterday after two lawmakers were reported to seek changes in the proposed tax bill, thereby growing concerns that US government will raising concerns that US government will not be able to pass the tax reform measures in the near time soon. Now, dollar still trades steady in the early Asian trade near 93.50 levels. Also in line with market expectations, both Bank of England as well as European Central Bank kept their key interest rates unchanged at the policy meeting yesterday. However, ECB raised their growth outlook for 2020. However, the common currency euro dropped as much as 0.4% after ECB said that it expects inflation to remain below the central bank's target of 2% in next year. Now, coming back home, rupee heads for fourth weekly rise, and NDF markets are confirming the uptrend in the rupee as dollar rupee now trades at 64.28 levels against the dollar in the non-deliverable forward market, which indicates a stronger opening for Indian rupee in today's trade. Moving on to bond market, the yields on benchmark 10-year bond ended 4 basis points lower at 7.13%. And lastly, global funds reduced their rupee debt holdings for the third consecutive session yesterday. They reduced their debt portfolio by approximately 470 crore according to NSDL data.
Well, thanks for that, Saloni. Before we go and take a look at the commodity space, I want to pull up the SGX Nifty because we've seen a big surge out there. The SGX Nifty is now about up as much as 100 points, clearly up as much as 1% and trading just shy of the 10,400 mark. And this is likely to do with the kind of exit polls that we've seen over the Gujarat as well as the Himachal Pradesh state elections. But we'll be watching out for that. Moving on to take a look at what's happening in the commodities markets, we have Jayesh Khilnani joining us. Good morning, Jayesh. What are you keeping an eye on today?
Morning, Agam. Let me start off with the base metal pack, which did really well overnight on the London Metal Exchange. So the index itself surged more than 1%, and the gains were led by aluminium, which posted the biggest gain that we saw in over 3 months. Copper and zinc were also up about 1% amid signs that there is growth in the major economies. And Chinese, this was all backed by Chinese data, where we saw that industrial output grew as much as 6%. So positive news coming in for the base metals, except for lead, which actually declined 1.5%. Moving on to the precious metal space, we've seen that gold has actually rebounded from the recent lows and climbed above the 1250 mark for the third straight day running now. Now this is, on the back of, we've seen that gold bulls have actually come back, because the open interest has surged for the first time in about 11 days. So we had 11 days of open interest decline, and as of yesterday we saw that taking a U-turn for the good. As far as oil prices are concerned, we saw positive cues coming in from oil from that space. The Brent version was up more than 1%, while WTI also surged about 0.8%. Now we're getting as far as commentary is concerned, wherein the IEA expects that the supply to increase going into 2018. On the other hand, the advisory group, which advises to the OPEC nations, sees that there will be, OPEC will actually see success. So some contradictory views coming in for the oil markets.
Thanks for that, Jayesh. We'll be watching out for those commodities. But moving on to perhaps the more, important news of the day. Exit polls predict a sweep for the BJP. The ruling party is set to return to power in Gujarat with around 115 seats and form the government in Himachal Pradesh with 3/4 majority. Bloomberg Quint's Tamanna Inamdar wraps up with all the details.
Well, the big message from the exit polls, if you put it briefly, is that the BJP sweeps Himachal Pradesh, retains Gujarat. The average of those polls is about 115 seats for the BJP, and for the Congress, well, they managed to inch up a little more than 2012. But let's get into a bit of those details, and we've picked some of the key indicators or the key polls that were out last evening. Today's Chanakya was the most generous to the BJP, giving them the 135 odd seats, 47 to the Congress, while India Today, Axis My India has taken a range of between 99 seats and 113 for the BJP, 68 to 82 for the Congress. So best case scenario so far for the Congress is 82 seats, which the India Today Axis poll gives them. C Voter poll gives 74 seats to the Congress and 108 to the BJP, while Times Now VMR gives 113 seats to the BJP and 66 for the Congress. You know why this is crucial is because remember the BJP have set a 150 seat target for themselves. So these exit polls show, and if you look at them perhaps reflecting what we will see on the 18th, that the BJP definitely manages to keep its government in Gujarat, but perhaps does not hit the high they predicted for themselves. Let's take a quick look at Himachal. When in Himachal, it's a pretty clear picture as far as these exit polls are concerned. Congress on its way out, BJP making a comeback and a strong one at that. 47 to 55 seats is what C Voter is giving the Bharatiya Janata Party in Himachal. 41 seats is what India Today Axis gives them versus the 25 seats for the Congress. And Times Now VMR gives the BJP 51 seats and 16 for the Congress. So the poll of polls, or the average broad picture that we see from some of these polls is 115 seats for the BJP in Gujarat in 2017 versus 117 that they had in 2012, while it's 65 seats for the Congress. Let's look at Himachal. Well, the Himachal poll of polls and the average gives 47 seats to the BJP and 19 to the Congress. So 2017 assembly elections, if you ask for the broad message coming out of it, considering that Prime Minister Modi aggressively campaigned in both states, especially in Gujarat, it would indicate that the Modi magic has been retained.
The results of these elections, of course, will be declared this coming Monday, but we'll have to wait and watch as to how much of this can be factored in today's day of trade. But it is going to be a short winter session of Parliament this time around with 14 working days, which goes till January 5th. And the government is expected to table 25 legislations, including the amendments made to the Bankruptcy Code, Amendment Bill and the Financial Resolution and Deposit Insurance Bill in 2017, on which the Joint Parliamentary Committee is expected to submit its report within the next 7 days. But Walt Disney Company and the 21st Century Fox have entered into a definitive agreement for Disney to acquire 21st Century Fox, including the 20th Century Fox film and television studios. Let's go across to Bloomberg's Rami Inocencio for all the updates.
Looking at all these numbers that are being bantered around is pretty crazy stuff, but when we get down to the main meat of this, Disney CEO Bob Iger did talk about the synergies as well as the cost savings of putting the mouse as well as the Fox together. Case in point, my first Bloomberg terminal chart, #BTV5957. What we're looking at here is studio entertainment revenue in white and parks and resorts entertainment revenue in yellow here. Now, imagine in an environment where the character assets, for example, from Fox get to join forces with those from Disney. That is what we're looking ahead today. For example, X-Men, owned by Fox. I'm a huge fan of that. The Avengers, also a huge fan, but they're owned by Disney. A lot of people are saying, you know, when are they going to team up? That might actually very well be something that happens here. Taking a look at studio revenue, though, it fell 21% because of fewer films earlier this year. But now, because of these team-ups, this might actually bump up. Similar story for parks revenue. They only rose about 7% here, but could go higher, because if you imagine a world, for example, at the Disney theme parks, that is Avatar, but with a lot of sequels planned, a bigger environment in Avatar, we could see a lot more people actually being pulled into this universe and, of course, opening up their pocketbooks there. To my next Bloomberg terminal chart, #BTV5959. Now, this is looking at the flip side for Fox. Now, what does Fox have to gain? It actually has a little bit more to lose, especially when we take a look at the income coming from some of its major divisions. All right, now in white, this is the entertainment division, and in blue, this is the TV division. And you can see that it's actually been seeing revenues in a bit of a range over the past several years. But when you take a look at income, it's actually been falling. For example, in the third quarter, Fox Entertainment's income fell 18%. 20%, and Fox TV's income fell 36%. One bright spot, though, has been the ad revenue coming out of, guess what, Fox Sports. And of course, we have been saying that Fox does want to focus on news as well as sports. Now, there is one more big recipient, big beneficiary, and that is Rupert Murdoch himself. This is Rich Go, the Rich Go function, RICH Go. A list of the top 100 people on Bloomberg's billionaires list. Now, taking a look right here, Rupert Murdoch is now at number 87. Over the course of the trading day today, he actually jumped 5 notches from 92. His worth is now at $14.3 billion. He gained more than $500 million just today, $580.6 million to be exact there. And analysts are saying that when all is said and done, when all of this is finally closed, maybe in the next year or so, as people are saying, that Mr. Murdoch could gain another $2 billion, which would put him someplace in the area of about number 69.
Of course, shortly after the announcement, Walt Disney CEO Bob Iger said that the deal has been made looking at disruption in the industry, and they hope to expand their reach and create more user-friendly content. Listen in.
In a get-together this summer, where we were talking about all the disruptive forces that we were seeing and the relative position of our companies, I left thinking that there might be an opportunity for us to do something with him. And I thought about it for a few weeks, called him thereafter, and suggested maybe we should get together and talk about it, and we did. Spent some time actually analyzing whether there was something to be done and what the value proposition might be for shareholders of both companies, and ultimately rolled our sleeves up, got into a negotiation, and here we are today. And I think what we're doing is creating not only a great company, but a great global opportunity for consumers to not only consume great content made by both entities, but to consume it under circumstances that are innovative and compelling and much more user-friendly. He will be integral to helping us plan the integration process, and he and I will continue to talk about whether there's a role for him at this company. We've had a good relationship, and he's been extremely helpful in this process, and I look forward to talking to him more about it.
Well, Shelby Limited is all set to list on the bourses today, and the issue had an overall subscription of close to 3 times. Darshan Mehta has done all the number crunching in relation to Shelby. Darshan, another listing in the healthcare space.
Yeah, it is. You know, it's been a long time since a hospital company listed. The last, I think, was HCG or Narayan Hrudayalaya. But let's see what Shelby has to offer. Overall, the issue size is 505 crores. This is a combination of a fresh issue of 480 crores. The balance is what goes to the promoter. That's around 25 crores. The base price is 248 per share, and the market price post issue will be almost 2700 crores if it lists as the same price. Now, how was it subscribed? Overall, not the best subscriptions given the spate of recent IPOs. The QIB portion was fully subscribed. The HNI was remained undersubscribed. So overall, just 3 times oversubscription. So that's the best issue, a subscription as far as the issue is concerned. How will the money be used? 300 crores will be used for debt repayment, equipment capex of 65 crores, and hospital infra of 11 crores. So that is how the entire funding will be used. The balance will be used for the other. So it basically has 4 models in which it operates. Own and operates its multi-speciality hospital, and operates and manages hospitals on a revenue sharing basis. So 90-95% of the revenue comes in from this model. It's associated with third party on a revenue sharing basis, and outpatient clinics is something that they have. So 4 models is broadly the hospital uses to gain its revenues. Now, as far as the financial picture is concerned, from FY15 they had a revenue of 275 crores. So they had an revenue CAGR of close to 15%. In the first quarter, they've done close to almost 90 crores. So they will exceed what they did in FY17. The second quarter numbers are not known. Even if you're looking at the profit, from 25 crores, they've moved to 62 crores. They've done 50 crores or 15 crores. So they pretty much should be at par with what they did last time around. But the margin picture is very strong. From a 25% margin, they managed to shoot up in the first quarter to 29%, because some of the hospitals became operational, and the capex from there had gone down significantly. Now, the peer comparison, revenue-wise, it's one of the smallest hospitals currently, just 325 crores of revenues in FY17, but they have a good EPS. So the ratio of the EPS to the revenue is good. So 7.2 is pretty much better than Narayana as well as HCG, at par with Fortis Healthcare. Now, if you're looking at the valuations, and even if you're looking at the average revenue per bed, it's pretty much one of the highest, only compared less to Fortis. So even that one, and average stay is also much lower. So on that front, Shalby performs much better. If you're looking at the valuations, Shalby is expensive. On an FY18 EV to EBITDA trades at almost 28 times compared to an Apollo, which is the largest, at 23 times, and a Fortis Healthcare, which is trading at 20 times. So valuation wise, yes, it's an expensive IPO. Probably that is why it did not come. But it has a superior margin and superior return ratio. So if you're looking at a 22% EBITDA margin, one of the highest that you're seeing in the hospital space, and return ratios extremely high, almost 4 times Apollo. And if you're looking at the ROA, is almost 8 times. So it is no doubt the most expensive IPO currently, but they have a superior margin and ROE. But it'll all depend on how it lists in trade today.
Absolutely. We'll be watching out for how its listing turns out to be. But let's move on and talk about the stock of the day. Good Luck India has reported a 39% jump in its September profit numbers, despite an 82% fall in its other income. Let's head across to Nikki Mirchandani, who is standing by to give us more details. Good morning, Nikki.
Hi Agam, healthy set of numbers coming in from Good Luck India. If you look at the top line, that's the revenue. It's a 24% growth on year basis at a number of around 312.5 crore. Net profit, as you just mentioned, has risen around 40% at a number of 5 crore as compared to 3.6 crore. A healthy operating performance coming in at 20% for the company on year basis. It's a number of 26 crore. Margins have remained largely unchanged at a number of 8.3, 8.5%, largely because of the similar top line as well as the operating performance growth that we're looking at. Now, saving efficiency, saving techniques and your top revenue growth has led to good set of operating performance from the company. Your other expense as a percent to your net sales has come down to a number of, as a portion to your net sales has come down to 5%, as come from 6.3% in the corresponding quarter of the previous year. Tax expenses have declined by as much as 15%, which has led to a sharp bump up in the bottom line performance. This decline comes, as you just mentioned, due to a drop that we've seen in other income, but that's a small number that we're looking at as compared to your overall, the operating performance for that matter. If you look at the segmental breakup there, pipe sheet, which contributes to around 88% of your overall business, that revenue for that segment has grown by 12% to a number of 278 crore. Engineering goods, which is almost 12% of your overall profits, has come down to 4%. Just to give you a little rundown of what the company is, it's a steel tubes, pipes and precision tubes manufacturing company, which has a market capitalization of less than 200 crore. Agam, back to you.
Thanks for that, Nikki. But moving on, what are the other stocks that we were watching out for on the back of news? Well, we have Shraddha Babla joining us to give us that list. Shraddha?
Well, to start off with, Agam, of course, HDFC Twins will be in focus because HDFC Bank yesterday said that they will consider a fundraising proposal on December 20th. You also have HDFC Limited, which said that they will consider a fundraising proposal on 19th December and that they will be subscribing to securities of HDFC Bank on a preferential basis. HDFC Limited and its subsidiary currently hold about 25 to 26% stake in HDFC banks. Of course, those are the two stocks to track. That apart, we're also watching out for Mahindra and Mahindra. Now, this one more auto company which has said that they're going to raise prices by up to 3% from January, and that's on the back of higher input costs. You have GMR Infra, which will be in focus as well, as the GMR Group and Megawide Consortium has emerged as the preferred bidder for Clark Airport project in Philippines. That's the second airport project that it is developing in Philippines. Gulf Oil Lubricants, we could see some positive reaction there. They've just started commercial production as their newly set up plant in Chennai. You have Fitch, which has placed IDBI Bank under a ratings watch. I'm not sure how that stock will, or if that stock will really see any significant reaction. And lastly, Tata Motors, where they will supply 215 Tigor electric vehicles to EESL, and that will be under the phase 1 of India contracts. So all of these stocks to watch out for.
Thanks for that, Shraddha. But moving on, what is the big brokerage call of the day? Well, let's head across to Somit Sarkar, who is going to give us more details there. Good morning, Somit.
Good morning, Agam. On big brokerages, first we have is Access Capital on JSW Energy. Now they have initiated coverage on the stock with a buy rating and a target price of 100. Now JSW has the lowest capital as well as the replacement cost according to Access Capital, and its strategically located assets result in a high plant load factor according to Access Capital. Now the company's declining share in merchant volumes and high share of power purchase agreements would increase the earnings visibility going forward. Also, the company is looking to substitute 50% of the imported coal with cheaper domestic coal, and this along with strongest balance sheet compared to peers will help to drive the earnings growth going forward. Also, its underlevered balance sheet will aid inorganic growth according to Access Capital, and Access Capital says that its balance sheet still has the capacity to buy in around 3 gigawatt of plant according to Access Capital. Second we have is Access Capital on Mahindra Logistics. Now they have initiated buy on the stock with a target price of 525. Now the company's focus on non-automotive segment and its focus to reduce dependence on M&M Group will drive earnings growth going forward. According to Access Capital, the M&M Group will contribute around 38% to Mahindra Logistics revenue by financial year 2020 versus 54% in financial year 2017. Also, better client mining and new client addition along with GST will drive growth going forward. They're expecting the gross margins to remain largely stable across both the business segments, and they're expecting a 28% earnings CAGR with firm return ratios given the limited capital expenditure that the company has. Also, they're saying that Mahindra Logistics would maintain premium valuations going forward.
Well, thanks for that, Somit. But moving on, there is a lot to talk over the course of the day, and you'll find all the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. A Bank of England policymaker said the breakthrough in Brexit negotiations this month could prove to be positive for the UK economy, which has lagged behind many of its international peers this year. Well, with that, it's a wrap on this edition of Daybreak. All you need to know is up next. Stay tuned in the Bloomberg Quint.